Welcome back to another Forex Fully analysis. It is Wednesday, May 4th. The time currently is 12:35 p.m. Eastern Standard Time, and I'm just going to be making this video as a quick FOMC prep for US30. We're going to be looking at the fundamentals going into FOMC for US30 and trade ideas for US30, and then I will be doing later an FOMC recap and an outlook for the rest of the week. So yeah, let's get right into it. I'm currently on the daily time frame here, and I'm just going to be doing a rundown from the pullback that we saw from all-time highs here at around 37K flat for US30. That is the current all-time highs ever for US30, but this is when the original pullback started, where we kind of started coming down to these levels here, which from the all-time highs, this is obviously the levels that we've been playing in. And again, we have now saw that price has tested 32,500 and has almost had a triple bottom now at that price point. And I will be explaining this in further detail. But yeah, I'm just kind of highlighting again how key level 32,500, that key area is, and about the 4,000 point breakdown we've had from all-time highs now. But going right into it, we did see a heavy liquidity grab and a sell-off conveniently line up with previous pullback in key demand zones at 32,500. And this previous pullback was from the last 25 basis point Fed rate hike, which was on March 16th, I believe. Could be wrong about that date, but I think it was March 16th that the 25 basis point first rate hike was announced. And this was the original pullback that was caused from the this 25 basis point rumor, right? So this was the highs that we peaked. So this was just the pullback from all-time highs here, as we can see. And we kind of came down to test around 33K flat, around that area from all-time highs. And obviously we had an aggressive bounce back to the upside here, where we did come back almost to test all-time highs around 36K flat. So this was now printing lower highs and kind of lower lows, right? Because we did break here. Actually, well, we closed here on the daily, but we started wicking down below these price points, right? And once we tested these all-time highs, we came back from the original sell-off just from investors taking profits when we print new highs, right? And obviously you're going to see some short positions flood the market and kind of an outflow on liquidity there just from investors taking profits at all-time highs. That's expected. We did expect that, nothing out of the new, right? We saw an aggressive bounce from around 33K. We came back up to almost test all-time highs, right? And from around 36K, 35,800, we started to see some reactions on the daily. And this here, this price action here, sorry, let me just fix that, coming down to originally test 32,500, which is the key demand zone that we have been highlighting the past 2 weeks of how big of an area that is, right? We saw this was the 25 basis point sell-off, right? So this was the original tap, 1, 2, so we got a double bottom here on the daily basically. But this was the original 25 basis point rumor. And yeah, so this was, the rumor, right, that we saw, the original rumors of the 25 basis point sell-off. And then on March 16th, right, look at the dates. It all lines up here, right, around March 16th. This was the actual announcement of the 25 basis point rumor, which is, I said this in my video yesterday with US30. Where is it here? Oh yeah, sell the rumor and buy the news, right? So this was investors selling the rumor of the 25 basis point hike here, right? Let me just clear this and make it a bit, right? So right here is investors selling the rumor of the 25 basis point hike, right? And then here is the news of the 25 basis point hike from the Feds on March 16th, and this is now investors buying the news back up. And where did we come to test almost? Back to all-time highs. and this is around 35,500, 35,200. This is around that now key level, psychological price level area, right? Where now we've had a double top, and from there, right, we kind of were ranging. We saw us kind of ranging for a bit during the month of April. We saw us ranging between 35,200 and 34,400, kind of stuck in a 800 point range there. But after the IMF meeting on April 21st, right? Let me just clear this, make it a bit more cleaned up here. After the IMF meeting on April 21st, around here, right? April 21st, around somewhere around here. After that IMF meeting, where we now started hearing rumors of the 50 basis point hike from the Feds, right? They're rumoring, and they've said that they're expecting for a 50 basis point hike today at FOMC. So this is now them selling the rumor, right? And if all goes as expected of the 50 basis point hike today, I could see something like this, right? Just repeating what happened last time, back to the upside, where we could come to test 35,200, 35,500 key level and current price demand zone. So that's kind of my predictions for FOMC today. If we do stay above 32,500, and again, if we do get the expected 50 basis point rate hike, now on the other side, if we do get a surprise of a 75 basis point hike and we do break below this key level here of 32,200, 32,500, honestly, almost like we're melting, right? We're going to melt to 31 to 30K. We're going to melt there because this is not what's expected, and this is going to cause some panic, fear, uncertainty, and doubt within the markets, especially for stock market buyers. We're going to see dollar bulls break the current all-time highs, and US30 is going to have a major outflow on liquidity and come down to around 31 to 30K flat. But that's only if we get a surprise of a 75 basis point hike, which honestly I don't see. I see Feds continuing with just the expected 50 basis point hike. And again, we know how greedy investors can really be. That's just going to go right to the upside as that's expected. And it goes back to, for US30, we're selling the rumor and buying the news, right? So that's kind of the daily markup and the FOMC outlook and prediction. Obviously, I will be giving an update on that after FOMC with the Fed decision, and we're going to see the market sentiment and kind of the market direction. But that's what I am expecting. Obviously, I wouldn't say go crazy at 2 o'clock, being an hour from now, for FOMC. We're going to see some major volatility in volume. We're going to see liquidity grabs. We're going to see price whipsaw up and down. But once market chooses the direction and everything is priced in from the news, I do see if we get that 50 basis point expected rate hike, we're going to go to the upside and come again to test somewhere around this area of 35,500, 35,200, right? So obviously you could take some buys in between all PPLs. Let me just go to the lower time frame now, kind of do a quick breakdown, and yeah. So today for US30 and New York Open, we did see price. We've honestly saw price last night just ranging between kind of 33,300 and 33K flat, that 300 point. But other than that, it's honestly just been ranging. It's been fairly bullish on the 1 minute here from 33K. We kind of came down to test here, but we're still in that range of 33,300 and 33K flat. Yeah. Other than that, let me just make sure I kind of went over everything in my notes here. Oh, and also I just wanted to mention one more thing. Currently, we are seeing, honestly, the U.S. is for sure in the beginning of a recession. Let me kind of zoom out here to the 4 hour. So within the next coming months, we're going to see a ripple effect of the higher rates and the continued global inflation, which is going to be as majority of the citizens, whether it's America, Canada, Europe, and I know actually Yellen about 30 minutes ago said she sees that Russia is definitely in the start of a recession, which honestly that's kind of expected with the Ukraine and Russia tensions. Russia is spending millions, if not billions, per day and week just on their military operations, so that's kind of expected, as well as all the sanctions against Russia. But also, now we're seeing these issues, and obviously from COVID and everything the past 2 years, now they're spilling over to the other economies, being North America, Europe, and it'll definitely be very interesting to see these effects and what's kind of going to happen to the economy. But yeah, it's just pretty simple that citizens can't afford or simply aren't financially stable enough for these coming rate hikes, as rates were very low during the pandemic. People were taking money left and right, and if they're on a variable mortgage, for example, they're not going to be able to afford these rate hikes, right? And again, I do want to mention U.S. disposable income is down the drain. I do have a chart of this somewhere that I'm going to have to pull up. I'll probably pull that up in my next video. So I will mention that as well. I'll go over that in my next video when we do the higher time frame US30 analysis. But yeah, again, Jay Powell, the rumors for FOMC in 1 hour is still expecting the 50 basis point rate hike. If we do get that, we know what we're looking for, buys. But I'll be doing an update in a few hours once price settles after FOMC. Thank you for watching. Like, comment, subscribe. All feedback is appreciated. And I will see you in the FOMC update.